And now, the 2024 Ticker Challenge. Kay, I think you're up first.
No, actually, we have Sean up first.
Oh, we have Sean up first. Sean, over to you, sir.
It's me up first. So this year, well, next year, I'm looking at clean energy. And you can see this with the ticker symbol ICLN in the US and INRG in the UK. The reason I mention this because I did all the research in ICLN, all the chart and everything. And then I went to, have a look at it on my broker and I thought, I can't even buy it. So I thought I can't bring this up if I can't buy it. But it turns out INRG is literally exactly the same. It's just a different currency. So I can still invest in it. And I will do, obviously, because I'm a man of my word. So we'll have a look at the chart here. Obviously, you've got a lot of things on the chart. And we can see an overall trend line coming down from basically the start of 2021. And, we know that because it was the top kind of holdings of First Solar, Enphase, VWS, Chinese company as well, and SolarEdge. And obviously, we all know that this year has been a particularly horrible year for those kind of companies. And I think with the kind of interest rates, kind of potentially being cut in 2024, in March, I don't think it'll be that early, but probably like the mid of the year and possibly towards the end. But regardless of that, the stock market is forward-looking, tends to be kind of 6 to 12 months forward-looking. And that's my kind of thesis to this trade, really, in a nutshell. In the bottom left corner, we've got the monthly. You can see the kind of red highlighted areas just, and that kind of corresponds into kind of the bigger chart that we can see at that $13 level. And we can see that's a massive resistance, in the previous years. And I think we've just bounced off of that, and I think we could see a nice retracement, really, from a longer-term perspective. You can see, it's kind of all the way up to kind of $35 there. So just a retracement back up to some sort of level would be great. We do have a bit of a zone here at 1775. That's kind of the first, tough point to get through, alongside obviously the trend line coming down. But I believe if we can break all this resistance, obviously it's going to be tough. I think we can sit on a nice path towards those kind of green and yellow lines. And that's kind of my thesis towards this. So I'm going for 40 to /50%. So I'm hoping to blow both of your socks off with this one. So I do apologize if it does come off. But yeah, I'm going for this one and I'm sticking with it. And I'm going to obviously invest in it myself as well, just to kind of reinforce that thesis and kind of drive towards this 2024 pick. That's it for me, really. Obviously, there's some top you can screenshot, you can read this for the viewers. But yeah.
I like this a lot. So ICLN or INRG, because we are truly global here at the Trading Triangle. And I really like your points about interest rate cuts being a big tailwind or benefit. It will benefit these stocks. First Solar in particular, right? I was like really hot on First Solar at the start of the year, and it just cooled off. But now we're getting into an environment where I think it could really rally again. So this is interesting, and you're going to feel good about it too if you get the win and you're investing in clean energy, right? Like this is a win-win.
Exactly right. Exactly. I was going to pick Enphase or First Solar as a company. I thought, no, I'm going to step it back a bit and take a bit more of a broader look. Maybe probably a little bit safer, I suppose, is what I'm looking at. But yeah, I believe this to be quite good. For me, it's not financial advice, but I like this one a lot. For me personally. Sorry, Kay.
No, this is perfect. I mean, I think a target of 50% growth from 13 to about 23 or so. I think that's a pretty solid move, I would say. For next year. So I mean, looking forward to you beating us on this one. We'll see.
I like it, and I like the 50% target, and you'll see why. Because my pick this year is Snow, ticker SNOW, and cloud-based platform. And really, though, me, I'm big on charts, and so there's a lot of fundamental reasons behind this. Like revenue is just increasing crazily quarter over quarter and year over year. Earnings per share and everything's just positive and trending in the right direction. They continue to beat every quarter recently. So love to see all of that. But this is a weekly chart, you guys. This is how long we go all the way back to the summer of 22. And it's just been consolidating, right? Like the longer the base, the wider the base, the higher the rise. And that's what I'm banking on here is that 205 level for Snow is broken. Even could be the end of this year, start of next year, expect a retest, and then we continue to push higher. And I'm targeting 300. So doing the math, Sean, 200 from now up to 300, that's 50%, buddy. So yeah, I'm right there with you. Right there with you. So that's the
Imagine if we all
goal.
hit 50%.
That would be awesome. In fact, that's the real goal: is we all hit
Yeah.
50% and everybody wins big next year. That would be great. So yeah, we've got this increasing. The only thing I'll add here is the trend line on the bottom. We've got higher lows, and it's just continuing to tighten up, which shows buyers are stepping in at higher and higher prices. So I really like this one. If we can break 205, throughout the rest of the next year, if markets continue to power higher, I'm looking for 300 as the price target for snow. So let's see what happens. That'd be 50%. So again, I really like that price target. And if it really gets crazy, it's hit 400 twice in the past or near it, right? So that would be nuts. That is not my price target, but that would be nuts. You like this one, Kay?
I love it. I love it. And you'll know why I love it, and I'll once you get to my stock.
Nice. I'll hold off on that. And Sean, what about from a technical perspective? Does this speak to you at all?
Of course it does. So you know me. I see a resistance point. I see a resistance support for a breakout. So yeah, I've been looking at this. I've written it down already. So 205 for Snowflake is one of those key levels for me to be watching, especially in the early parts of next year, or maybe even this year. Could see it this year. Yeah,
I think Santa Rally may push it back. It's going to be a tricky one, but if it does, then you probably can see that breaking 205.
I'm looking forward to you guys. So, all right. So we've got first clean energy. Now we've got cloud-based snow. What's next?
It's a cloud-based identity management software, right? So why did I choose Okta? And we haven't talked about this particular stock. The stock was trading at 294 back in 2021. We are down 70% from that price point. Massive decline in shareholder value. But what I like about this stock, and it's a little bit, I'll give you a little bit of the background on the financials and a little bit on the fundamental side. Okta is operating in a $80 billion total addressable market, and they have a very tiny share at this point in time because that addressable market is dependent upon a lot of digital transformation. So companies and big enterprises, small enterprises, medium enterprises, they're moving away from their on-prem to cloud-based. So as they move to cloud-based, all the different applications that they have, they need to be able to have a single sign-on so that you put a username password once and you can log into multiple applications. So they do a lot of that stuff. Interestingly, they are the market leader in the identity management solution ahead of Microsoft. Can you believe that? And the main reason is because Microsoft has a very good identity management system for their applications. It's perfect. It's great. They're
Right.
not so great when it comes to other applications. Whereas for Okta, it's platform agnostic, which means that it works very well with all types of application since it's already a cloud-based product. Now, just getting into a couple quick financials over here, and then we'll touch the chart over here. So consistently, they have been beating the EPS and revenue since 2019, and that is what I love to see in any company is how well they predict their revenue. It doesn't matter whether it's going down or going up. Is can when they predict something, do they hit it? And they have always beaten it since 2019. So that's very good credibility. This company brings about $584 million every quarter. So you're looking at almost $2 billion in revenue for the year. And next year is going to be actually larger than the $2 billion. 15% year over year growth, even though we had such a drought year where companies are cutting costs, they still grew 15%. Their gross margin is 81%. So generally for software companies, what ends up happening is that 80% is a good gross margin for profitability. They are 81%, so they are above the average, and hopefully they improve further on. They also have a revenue growth of 21% coming up next year and free cash flow margin to improve. Those are positive signs for the company. Last, 18,000 plus customers. That's a pretty big number with over 4,000 customers bringing over $100,000 in the contract value. So those are all financials, fundamental analysis. But let's touch upon the stock itself. The stock was trading at all-time low. Most recently in November, it hit about $44. And most recently in November, the reason that happened was they had a breach in that there was a hacker breach. And they patched it up and everything was fine, but the stock rate took a beating. Now, right now, the stock has this little bit about 85 or so that's where they're targeting to be a resistance level. But you see this massive candle in the last couple of days. It has really pull the stock above, right? So everything is pointing in the right direction. Now the price target right now is about 120, so you're looking at about a 35%. I would be targeting closer to about I would say a little bit lower than 120. So I'm not targeting 50%. I think anywhere between 30% to 50% would be something that I would love to get on this stock for next year. That is my target. And currently the stock is still below, almost 47% below their 200-day SMA after that massive fall they had. So something I'm targeting not just for trading for next year, but also building into my long-term portfolio, considering the SaaS companies are really very good in bringing profitability once they become profitable. So that's my stock.
Good stuff, Kay. I like Okta here, and I like the chart. Noticing one thing about all of our charts is that we're looking for a breakout over key resistance, right? That's what all three of us are watching for. Make sure you're paying attention to those resistance lines, and then if we get through them, then you know what to do. And if we don't and it rejects, then you know the trade's not there. So great picks, you guys. Big upside potential, I think, across the board.